Hello everyone and welcome. This is the economic macro overview of the stock market, and in my opinion this is the video to watch if you watch anything, okay? But we're going to be looking at the bread and butter of my content, which is the economic overview, and we're going to start off top-down approach all the way from the election to the Senate to the Federal Reserve data and housing consumption, all the way down to equities and stocks, so you get the whole picture idea of exactly what's going on in the market today. What's interesting here is that 120 million people plus voted, a huge turnout. Especially on the East Coast, we saw an insane amount of people vote around the Georgia region, which actually ended up flipping the state around Atlanta specifically. And if we look at the data, we can actually see the increase in voting, which is really interesting right here. All these little triangles point to how many more people voted. And in New York, people actually didn't vote as much. Which may be because of, more progressive states may or may not want to vote for a Joe Biden candidate. And either way, they probably felt like Joe Biden would win their state, so there was no point voting. Same in California here. But on these East Coast, on these swing states, you see huge increases in voting, which is one indicator towards the economy and towards the engagement of the general population. Now, the market is relieved based on these news. You see the Senate has stayed Republican, which does relieve the market. Senate Republicans held it. The capital gains tax will not increase. And this was kind of a huge thing the market was looking out for. Democrats are emerging tax idea, look beyond income and targeting wealth. Okay, they were thinking about putting capital gains tax, but not only capital gains tax, they were looking at unrealized capital gains. So you wouldn't only get taxed on the actual income when you sell a stock, you might actually get taxed just for holding and having that wealth. Also, there's a less chance of a nationalized healthcare and tech breakups with the Republican Party staying in power. And Mitch McConnell has actually reported that he is going to go ahead and make stimulus talks and negotiations even without Trump. That was a big scare. That was something that was kind of looming over the markets, whether or not we would get stimulus. So it's pretty much confirmed. The Democrats are definitely siding with stimulus. So if you have Mitch McConnell in the Republican Senate looking to back up stimulus talks, that is great news for the market, great news for stocks. Now, looking at another great indicator, and this is more global economics, coronavirus hit Europe pretty hard, okay? And this article title kind of says what I'm about to say, but opposite. So since coronavirus, it seems like there's going to be somewhat of a mini depression coming up. There's some uncertainty in terms of how coronavirus will affect Europe. So a lot of that money is being taken out of European companies, flowing towards the US. So another great indicator when it comes to what's going to happen here and kind of what we can expect. Very bullish signs there. And switching gears from Europe to US fiscal policy, we have the Fed still pumping. That printer goes brr. Okay, it has definitely kept the pace up. It went down a little bit here, and that's when you saw a little bit of that fear. But yes, lo and behold, the balance sheet is still expanding. No signs of contraction happening as we actually passed the total assets in millions of dollars just recently on November 2nd, so I expect a huge surge in the stock market. Here, we're going to take a look at some economic data to just show how bullish this market is, really. I mean, if you look at the personal savings rate in the United States, it went all the way up to 33%, and that just means people were saving more money. If people keep more money in the bank, that is money that is not being spent on businesses, not being spent on stocks, not being spent on the market. So you can see a contraction, and you can see this goes up, the market goes down, okay? And this went up obviously around the coronavirus fears because we didn't know. People were buying toilet paper, people were saving money, people were buying gold because they were scared. That's why you see gold explode so much. But now it is coming down, and at this point it is at 14.3% on September 20th. This chart is actually not up to date. Since then, it has actually dropped even more so, I believe, from the teens. And the unemployment rate also has gone down. It just dipped under 7% to 6.9%, which is amazing. 1.7 million jobs per month are being added on average. That is insane. Households and nonprofits have gone up in terms of the net worth. Okay, you saw a huge dip here, obviously, with the whole coronavirus situation in Q1. But Q2, we're actually past pre-coronavirus times when it comes to net worth is pretty insane. And a lot of this does have to do with corporate equity, real estate. You can see kind of the breakdown there on the overall money supply that is being pumped into the net worth of households and nonprofit corporations. But overall, it's a great indicator when it comes to the economy. Another one, personal consumption expenditures. This is a really interesting one. Really interesting one for all econ majors here or anybody interested in economics. Okay, this remained largely flat through 2019, and then these are durable goods, obviously. Extremely obviously, all these charts have a huge dip around the coronavirus season, right around March. It kept going down, no one was buying anything, and then boom, it exploded. Now, this is a two-factor system. One, obviously, we're getting out of the coronavirus, and two, we're going into durable goods because we're not buying services anymore, right? It's harder to go into restaurants. It's harder to go to do in-person services, and this is a service economy, as we all know. So the less people spend on services, the more money they have to spend on durable goods, buying Amazon, whatever it may be. You see that huge increase there. So keep that in mind when looking at products and when looking at stocks of what you want to look at, or even just keep it in mind in general for other situations that happen that could mimic the coronavirus looking ahead. And lastly here, we want to look at the house prices. They're increasing. They're increasing, okay? We're seeing a lot of houses being bought. Housing is up 59%, okay, as of November. And the reason this is important is because equipment sales have also gone up. And with housing, it's a great indicator because people are buying more. And when you buy a house, you don't just buy a house, okay? And I just bought a house, all right? You also buy 1,000 items to, you buy furniture, you buy appliances, you buy a million and pretty much anything you could possibly imagine to occupy the house. People are buying more products, and it just goes with the whole direction of the market. And lastly, how does this affect the stock market? Well, let's take a look. This is a very simple chart here, and I want to focus on technology because that is kind of my bread and butter. And I want to show just why I focus on technology, okay? Here we have a comparison of 3 different charts. Innovation and growth has exploded. We have the S&P 500 down here, or SPY. We have the NASDAQ 100, which is largely, all the technology stocks, all the top 100 technology stocks here. And then we have ARK Innovation ETF, which are basically all the disruption stocks. Now, I want to look at the breakdown here. So S&P 500, we all know, are the top 500 companies here in the US, or at least so far, right? Sometimes they don't let in other companies like Tesla. But we can see that technology companies, by and large, have been outperforming the S&P 500 quite well. But I want to look at how you can even take more advantage of this, okay? How can you make even more money than just the NASDAQ? Well, when you look at the breakdown of NASDAQ and the holdings, 50% are in FANG plus Microsoft, okay? That's kind of your exposure when you buy into NASDAQ. 30% are in sustaining tech and comms. You're talking 5G, you're talking all those Broadcom companies. And then you have true innovation and disruption at 20%. Okay, when you look at the NASDAQ and the actual companies that are trying to innovate and trying to change and disrupt an entire industry, which disruptive companies, in my opinion, give the best returns because obviously they take over a market and market share when the product comes into fruition. Like you see that there, this is the NASDAQ compared to ARK Innovation ETF. When I look at their holdings, 90% of their ETF and their funds holdings are into the true innovation and disruptive companies. Okay, this is a Tesla, this is the Square. And just to give an example, during these kind of crises, the innovation and growth companies take off. And obviously, I'm showing you the data here. When it comes to ARK Invest, I got in at around $60 because I knew this thing was going to explode. And I bought some at 40, but I ended up selling around 50, just made some quick profits. But then I got back in and I'm in it for the long haul because during kind of these crises, okay, these growth companies, they take off, they explode. And clearly you see that here with the breakdown. Just as an example, so Square, another company I'm heavily invested in and a great company I see a huge future for, they started off just as a small business point of sale system, right? We've all paid through Square, gone to the food truck, and then they just make you swipe a card, boom, you get your receipt through email, whatever it may be. And they have expanded from the point of sale system into virtual e-commerce, okay? And they're basically able to create an entire accounting system for small companies, not just a point of sale, but you can do it everything strictly online. And that's why you see Square here. See how it just shot straight up, okay? It has been unbelievable, unbelievable, all right? And you see just how much they've taken advantage of crisis here and how so many companies have become reliant on these new technologies with the digital age coming through, and many businesses, okay, are shifting into the digital age, and that's what I'm calling it. Because before, a lot of companies were not wanting to change. Even my company, right? They just wanted to have people work from home, or they didn't want people working from home. They didn't have the equipment. They didn't have the digital infrastructure to house a lot of people working off-site. And as more companies become reliant because of crises like this, they buy so much technology and they buy new proprietary software for their companies, and it makes them switch directions. We're entering a digital age. The workspace will never be the same post-coronavirus. So be thinking about that when it comes to stocks and how you want to invest for the future. So that's pretty much it. An economic overview there. Thank you so much. Bye-bye.